So how about this? E-mini is up 100 points from Friday's close. Look at this big gap up. So a lot of buying over the weekend. And the buying continued throughout the first half of the day. Unfortunately, I didn't really see any good buys that I liked. Maybe just kind of my style. When it's far away from the moving average like this, I'm looking more for some kind of reversal back to the moving average like this. I mean, you always want to stay in the direction of the trend, but on the open, there's opportunities for reversals. So what I'm seeing here is a possible wedge top. There's an initial larger push, but often what you'll see is that it ends up being like 4 pushes, and so I would count the wedges starting here first, then second, and then third, and you can also see a little bit of a double top. So I think bulls that had bought somewhere in here, they're going to be exiting, taking some profits below a bear bar like this, and you can see it was at least enough for a scalp. I think it'd be better to try to get a swing trade out of that because there was more room to the moving average. But you know, if you did that and you didn't manage it, and you would have gotten stopped out. But either way, I think I think that's a good short there. Far from the moving average, you're around 11. This is around 11:20, 11:30, when oftentimes if you look back at prior days, you can. This is one way you can kind of go study. Look at when the market is above the moving average or below the moving average. Look at the highest price before it touches the moving average. So today, the highest price is at 12.10, and then that's when it came back and touched the moving average. Most days touch the moving average before noon, so before 12. So I was expecting the market to touch the moving average by this time right here, by about 12 o'clock. So looking at this at around 11:25, that would make sense that this would be the pullback that comes back to touch the moving average. So I liked selling there, and I liked it for a swing trade. I considered buying above this bar, and I'll mark it. It's, to me, it's iffy. It's good. It's a decent sized bull bar, and then you get this little follow through bar. That's another bull bar. I mean, so that's good, and it's above the moving average. Right, you're staying in the direction of the trend. These are all good. My concern with this is that I was seeing this as a spike and channel like this. So spike, channel, then break out of the channel. And then what happens after, what's the third stage in the market cycle? It's a trading range. So spike, channel, and then we're expecting to be entering a trading range, which we have been in for the rest of the day. So I didn't want to be buying above here because of that chance of this being near the high of the trading range, which ultimately it was. Even though there was a room for a scalp there, ultimately this was near the high of the trading range. So that's why I avoided buying there. Also, once again, we're around noon and we haven't touched the moving average yet. And the day always touches the moving average. So it was unlikely that we were going to have another breakout up here and continue strongly up. Especially considering on the daily chart, we're coming right into the 20 moving average. So I didn't want to be buying too high up here. So eventually the market did have a bit of a reversal here. Strong bear bar closing below the moving average. Now, this in itself is usually not enough to send the market lower. You need an additional pattern. You need additional bars, more time. And to me, this was enough through here. Strong bear bar, bad follow through initially, but then you get a pullback that ends, and then a second pullback that ends, and then we're getting a bear bar below the moving average and a second bear bar below the moving average, closing below its low. So I liked this short here. You have targets below, like I just grabbed here. This is the 50% pullback of the day so far. So if you're selling here, you have targets below, and it's possibly a trap off of this. So bulls are trying to buy this pullback to the moving average, but then they can't quite push it up, and then they're having to get out of their longs below one of these bars through here. Same kind of story with the idea of selling below this bear bar. It's also a double top. It's a lower high double top. So we have a high up here, then we have a double top. Now this double top is lower than this double top. So we're getting this series of lower highs, lower lows. Bears are getting more in control. And I like how it's kind of staying below the moving average. The moving average is controlling price. So to me, this is worth trying to go for a swing trade down. Probably once it gets to like this low here, then you're going to be managing your stop. So you'd at least be break even plus a couple ticks by the close of this bar. And with this bar, I was thinking I had some concerns after this bear bar. So even though I was bearish, right? We're talking about getting short here, and we want it to go down here. At the close of this bar, I had some concerns about the bearishness, because I was thinking this might be a second leg trap. So we have a first leg here, and it's decent selling. Treat this as one whole leg pullback. Then this might be the second leg trap. So we're expecting a second leg off of this, but it's in a larger bull move. So this second leg might be all we get. And you'll often see that where this second leg is stronger than the first leg. And the second leg is just tricking people into selling, thinking it's going to go lower. But really, it's a second leg trap. So people, if they're selling here, they're really selling into this low. They're selling into the 50% pullback. And ultimately, they get trapped, which is what happened in this case. So I think if you had sold here and you get a bar like this and you're looking at it thinking decent chance of a second leg trap, I'd move your stop down to break even plus a couple ticks, and then I would exit like half of your position here. I think that's a good way to manage that. If you're still looking to get short, I think this is another reasonable short. Bull bar, pullback, second bull bar. So we have a double top and then a bear bar. And I think we've had enough attempts up by the bulls here to say that this might not just be a second leg trap. We might have more down, because I was thinking the trap might have already happened. So I like the idea of trying to get short there. And once again, that's for a swing trade. I don't think your probability is strong enough to try to scalp. I'd really be selling there to try to come down 2 times your risk, or even come down and test the open. Lower chances we're going to try to fill the gap today, just because we're getting later in the day and then there was so much buying on the open. But maybe for later this week, the market might try to fill this gap. So this is going to be important for the rest of the week. And if it's not filled this week, it'll be important into next week. So that's something to keep an eye on. Looking at the daily chart again, potentially where we're at is the top of what could be a second leg. So first leg, pullback, second leg. And another reason to think that we might have more down soon is this is a pretty tight channel down. It's a pretty sharp sell-off here. And we can draw a trend line in, and this is the first break of that trend line. So when you get that, this is more likely a minor reversal. So there's minor reversals and major reversals. So you look at this like move on the way down. This bull bar, that's a minor reversal. Any of these bull bars, those are minor reversals. This is also a minor reversal because we have not had a more complete reversal setup. The reversal has not fully played out yet for this bear trend to end, and then for there to be a bull trend to start. Not saying it can't go up higher, and I do think bigger picture of the next few weeks we will be in this sort of trading range. But over the next few days, I would not expect the bulls to be too strong. I think the chances are we'll probably be trying to test down here one more time, maybe to the high of this bar, high of Friday's, the high of Friday, because that's the gap that we were looking at on the 5-minute chart. Maybe to the low of Friday, or maybe even to the low of the whole move. But in general, trends don't become a V bottom. V bottoms are uncommon. It's more likely that this is an initial break of the trend line that we then have to retest lower. So that's kind of what we're watching out for. So I would be a little bit more bearish over the next few days, and probably have more of a trading range mind if I'm thinking on terms of the next couple months. Something else to think about. This is the weekly chart. And thinking about these bear bars down, notice they have these little tails on top. Were these tails started? Were these tails created at the start of the week or at the end of the week? These were started at the beginning of the week. So these little tails on top. So bear bar, then probably Monday or maybe Monday and Tuesday created this little tail, and the rest of the week sold off. Same thing, Monday or Tuesday, and then the rest of the week sold off. Same thing for this week. A little tail on top, and then sold off. So those little tails start early in the week. Do I know if this week's going to end up bearish? I don't know. But when you're in a bear move, generally the tails on top of bars form early in the week. Another thing to keep in mind, after 4 bear bars, this one little bull doji is not going to offset these bear bars. Probably more sellers above this than buyers. And then the sellers are probably scaling in higher as well, scaling in around 6,000 or higher. So because of that, I'm looking at this as being a bigger trading range for the next couple months or longer. Also looking at the 4 bear bars down, probably going to get some sort of second leg off of that. And if you could imagine a channel line in here, 4 bars down, break of the channel, usually need to come down and test maybe the close of that, or test the low, or at least spend more time in this area before the market really reverses up. So those are some different takes on different time frames, and so bigger picture, I think we're in a trading range. I don't think any buying is going to have too much follow through, and any selling is going to have too much follow through. I think we need to kind of play the trading range for a few weeks, a couple months before doing something different. I'm working on the Peru video. I'll have that out later this week, and that'll be a really good video. So hope you guys enjoy that when it comes out, and I'll see you next time.